Good afternoon. Global stocks are lower as investors brace for the last round of interest rate hikes this year from the major central banks, hoping that the large pace of interest increases will finally show signs of easing. Oil prices rose as a key pipeline supplying the U.S. remained shut, while Russian President Vladimir Putin threatened to cut production in retaliation for a Western price cap on its exports. Meanwhile, Africa's largest grocery retailer, Shoprite, has received the green light from the Competition Tribunal to continue with its acquisition of the several Massmart-owned stores, although this excludes 10 grocery stores under the Cambridge and Rhino Cash and Carry brands, which the tribunal has identified as highly problematic. However, to talk to us about what we can expect in the coming week, we are joined by Gary Boyson, who is a portfolio manager at Rand Swiss. Gary, thank you so much for your time. So as I mentioned in my intro, a busy week for a lot of the central banks and probably risk off right now, we don't know. But how are you just, assessing the global market sentiment right now, as well as how our local markets are holding up?
Well, I think we're treading water ahead of those key announcements, as you said. A lot of central bank action. We've got obviously the US CPI figures coming out as well, all of which is going to inform those the Fed's decision on Thursday evening. We'll obviously, at least on Wednesday evening, we'll get the result on Thursday during the day in the market. But overall, we're not looking too bad. So I think with China opening up, it's maybe bringing in a little bit of optimism, although they do have, I suppose, increasing COVID cases. But it's pretty balanced. So about an hour ago, we were flat on the all-share index. We have actually just ticked green, so we're up about a quarter of 1% currently. The resource index is the one under pressure. That's currently down about 0.13%. Both the industrials and the financial indices are positive, so that's catching a little bit of a bid this morning. But I'd expect things to be choppy for the next couple of days. All eyes are on those big announcements, and we might be catching, a little bit of negativity from the US on Friday. The US closed down 0.73%. After seeing a slightly worse than expected PPI number. So maybe with a little bit of inflation creeping into the US system, that's just stoked a little bit of the more negative sentiment. But as I said, at the moment it's choppy, it's sideways, and I don't think we're going to get any direction until we've heard from the Fed.
I mentioned in my intro as well that the Competition Tribunal approving Shoprite's bid for those Massmart stores and coming with tight conditions, and there are certain stores that they can't buy because they were deemed as problematic. What kind of value do you see here in Shoprite's move to buy these Massmart stores? Because I do remember the CEO of Shoprite saying that even though Cambridge has lost about, I think, 1.5 billion over the past 3.5 years, they do believe that they can run these stores profitably.
Well, I think if you look at Shoprite's track record, historically they've been exceptional operationally. So, and Massmart's been just the opposite. So, the idea that they might be able to take Massmart stores, run them more efficiently, maybe with better, central distribution, I think is very, very viable. They're obviously paying. There's been arguments that they're paying below the net asset value for these stores, which is one of the reasons that it was taken through Competition Commission and the Competition Tribunal. Obviously, Pick and Pay and Spar at least, lobbying for the transaction to be blocked. They are competitors, I think, just using the regulatory framework locally to try and hamstring Shoprite. But at this stage, it looks like a great deal. I think Shoprite, has agreed, obviously, to the conditions put in place by the tribunal. They're going to, do what they can to protect the jobs at these stores. They've got minimum spend on skills development programs, and there's also obviously employee equity programs that have to be put in place as part of the conditions. But overall, I think it's, that I suppose almost spending premium, was absorbed into the deal price. And that's why they managed to get the stores that much cheaper, because they had such stringent conditions that they had to comply with. But overall, as you say, taking on 42 new Cambridge stores, they're taking on 2 fruit spots, they're taking over the Mass Fresh meat business, at least, as well as 12 mass cash and carry stores. So I think it's going to help Shoprite expand its footprint, and because Shoprite is a savvy operator, it looks like a good transaction.
I want to take things stateside a bit, and probably even our local markets. When you look at some of the price action we've seen, especially with some of the bids and the rallies here, what's your sense of what investors are trying to do or trying to buy, and the rationale behind that in this environment?
Well, I think they're playing a dangerous game, I think, to an extent. We're trying to second guess the Fed. We're trying to second guess, a slowing in the pace of interest rate increases, I suppose not just in the US, but across the board. And that's, helped prompt the big recovery that we've seen from lows, in October. And most sectors now up over the last 2 months and, reaching really key technical levels. So if you look at the S&P 500, if you have I suppose a technical analysis slant, then you would say that we've approached the 200-day moving average. There's a decline trend line on the S&P 500 that it's bounced lower. And I think now we're kind of waiting to see what happens. And if the expectations are right that we are going to see 50 basis point increases from probably the three main central banks, so Fed, ECB, and BOE, then potentially there's room for markets to move a little bit higher. At the moment, if you look at Fed funds futures, for example, there's only about a 75% chance that we get the 50 basis point increase. But 25 basis, there's a 25% chance that we get a 75 basis point increase. And if we do get 50, some of that premium is going to come out, and we should see a nice Christmas rally into the close of 2022, and hopefully see a break of that technical level and see a little bit of a recovery in US equity markets. On the other hand, there's a lot to watch inside that announcement, and it could be hamstrung by the CPI numbers. It could be hamstrung by the idea that the Fed telegraphs that the terminal rate of these interest rate increases is going to be higher than expected. The market's expecting the Fed funds rate to top out around 5%, and if they in the commentary they say or indicate that this could be higher, maybe 5.25 or 5.5, that could also pull us back off that 200-day moving average or that decline trend line, and we could see equity markets very, very negative. So again, unfortunately, it comes down to what happens on Wednesday evening, and as I said, we're going to feel it in the trading session on Thursday, just ahead of that public holiday. So I think there's going to be a lot of movement in our market on Thursday.
Just quickly before I let you go, how are you positioning as we wrap up the year going into 2023, given that it could be a volatile year?
Well, I think that, as I said, there are a lot of moving parts going into the close. I think FX may be a little bit stronger historically. We see the rand-dollar exchange rate appreciating over December. It hasn't been the case this time around, potentially because of load shedding, maybe just the the incredible strength that we've seen in the US dollar. But generally, I've heard an explanation where our commodity exporters work through the period, but our importers tend to shut down some of their supply chains over that Christmas period. So you generally get a much stronger rand. That could be an opportunity, just to buy a couple of dollars into the close. As I said, equity markets, I think, are going to be very binary. It's going to come down to that announcement. If we get what we're expecting, equity markets higher. If we don't, we're going to see the selling off. I don't think we're going to just move sideways into the end of the year. I think it's going to be a very binary result after the 14th of December. And then I think fixed income markets remain attractive. We've obviously got higher interest rates. We're playing it specifically through hybrid structured products for our clients. I think with yields a little bit more aggressive in the money market, in the bond markets, some very interesting investment options that are now far more viable in a world where we have interest rates again. So we're quite constructive on fixed income, but overall, equity markets, it's going to be very, very difficult to say. It's going to be a very binary outcome.
Yeah, Gary, let's leave it there. Thank you so much for your time. That is Gary Boyson, who is from Rand Swiss, giving us his expectations, at least for the week, and telling us how important it is to pay attention to that CPI figure as well as the federal rate announcement. That is it from me. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.